So the Central Bank of Nigeria has sacked the board of First Bank. What's going on? Let's talk about it. Hey folks, welcome to The Way I See It, which is my podcast on all things money, personal finance, also where we talk about the economy, right? This week, I woke up and I saw a report that the First Bank had let go of its CEO. The next thing I saw a report that the Central Bank of Nigeria, which is the regulator of banks in Nigeria, had issued a letter, what we call a query to the bank, the First Bank, the board of now, and asking the board how they had taken a decision to let go of a key man in the bank without consulting the central bank. So I was like, okay, this is getting interesting. They did not consult the CBN before they let go of their MD, and by the next day, the Central Bank of Nigeria, the CBN, had asked the board of First Bank Holdings and First Bank, the bank itself, to vacate office. In fact, they had given them the sack. So that was the complete story that moved and escalated very quickly. And it created a need for us to investigate and find out what's going on, what's happening, what can we learn from this, which is what I did over the weekend for you guys. So let me quote, just to set the stage, what the Central Bank of Nigeria, Godwin Emefiele, the governor, said when he asked the board of First Bank and First Bank Holdings to leave office. And I'm quoting him here. He said in 2016, the Central Bank of Nigeria had conducted an audit of First Bank Nigeria. So when I say First Bank, I'm talking about the bank, right? And found out that the bank was in grave financial condition. This is a quote from the central bank, the regulator, that the bank was in grave financial condition, that the bank had inadequate capital, and that loans were given to internal customer who had not paid back those loans. So this is the regulator saying that a bank in Nigeria was in grave financial condition in 2016, and that it was caused by not having adequate capital, which was caused by the bank giving loans to internal customers, and those internal customers had not paid back those loans. So that sets the stage for you for what's going on in First Bank if the regulators' charges stand. So before we go further, it's important that we just step back a bit and try to explain how banks make money. So how does a bank make money? Well, a bank starts off its life as a normal company. So promoters come together, create a company, and use that company to apply to the regulator, which is the Central Bank of Nigeria, for a banking license. Let's assume for simplicity that the promoters contribute 10 million, and that's going to be their share capital. So they say, hey, we've got 10 million CBN, Central Bank of Nigeria, and we want to apply for a banking license. The CBN will then, look at their records, look at the CVs of the promoters and say, well, we're going to give you a license. So there you go. That license gives that company the right now to go to the general public and receive deposits and also make loans to the general public. So you have the 10 million or the 10 million that the promoters have brought into the bank as capital. But because they have a license to receive deposits, they can create branches and they start to take deposits from the general public. What you then find is over the years, the amount of deposits that is being taken by the bank will far exceed whatever capital that the promoters have brought to the bank. So in every bank, that's what you find. The shareholders' funds is used to start the bank, but the deposits then override and grow substantially more than the shareholders' funds. The bank receives deposits. Those deposits that the bank receives are liabilities to the bank. They're not owned by the banks per se. The bank is paying the public to deposit money with the bank. So those are liabilities to the bank, and the bank pays interest for those liabilities. But the bank turns around and takes those deposits that the public has given it, and it gives it out as a loan. When the bank makes a loan, those loans become assets of the bank, and the bank then earns an interest on those assets it has created. So let's just back up again. The bank receives deposits from the general public. Those deposits are liabilities, so it pays the depositors interest. But the bank also makes loans to the general public, and those loans are assets to the bank, and the bank earns income. So when you take the interest that the bank will earn from making loans and the interest that the bank will pay from receiving deposits, the difference is what bankers call the net interest income. That represents the spread or the margin or the difference between what the bank is paying to receive deposits and what the bank is earning from making loans. So a good bank will always have a positive and growing net interest income. The net interest income is the key to determining how efficient and how profitable the bank is doing from their ordinary business. So if you look at First Bank, for instance, you then ask yourself, okay, how much deposit did it have and how much capital or how much deposit did it have and what was the capital base of the bank? Just to illustrate this example we've given. As a 2020 financial year end, First Bank had capital of about 768 billion. That was the capital. So that includes what the promoters brought in, the share reserves, the retained earnings. All that capital was about 768 billion. But the deposits from the general public was 4.89 trillion. That's to the T. So you can see the point I'm making, that the deposits of the bank far exceed whatever capital that the owners have brought to the bank. And remember, the bank is then paying a cost to this 4.89 trillion. If you put deposits in the bank, you earn interest. The bank is supposed to then turn around and make money from lending out this 4.89 trillion and then making a profit for the bank, right? If you do not earn an income on the deposit that you have taken, then you would incur losses because your expenses will be fixed and you have no income to pay off the interest on those loans and on those deposits that you have taken. So look at it this way: you have 4.89 trillion and you are paying deposit rates on that fund, but you are not lending out the money to earn interest to then pay the spread to your depositors. That's the recipe for failure. That's a recipe for the bank becoming illiquid. It appears that was what was happening in First Bank, that when the First Bank received deposits, they did create loans, but they created the loans to their own director or directors, not really clear at this stage. And those directors took those funds. And when the directors took those funds, they are supposed to make interest payments back to the bank. So the bank can earn a return and the bank can pay depositors and the bank can cover their costs and then post a profit. So once the bank does not earn interest on the loans it has created, you can then see that the cost side has nothing to balance against the revenue side. And clearly, you then have a loss. According to the CBN, they gave a forbearance, which means they asked First Bank that you can take your time and cover up the quote unquote hole we have seen, the capital insolvency hole we have seen. So in 2016, First Bank was asked to recapitalize the bank with almost 150 billion spread over 4 years. So they had given out loans. The loans were not performing, i.e., they were now bad and doubtful, which means they were not paying interest back to the bank. So that's why the bank was in a grave financial situation. So CBN says, okay, over 4 years, take 150 billion and put back into the bank. So the bank is capitalized. It appears this was done, and it appears that the bank regained some profitability down the road, right? But the problem was still remained that according to the CBN, the loans that the bank had issued to these directors were never perfected, which means that the directors gave collateral to receive those loans, but those collateral was never transferred formally and legally to First Bank, which then meant that if First Bank wanted to pursue a claim against the directors for those loans, it could not legally because it had no collateral in the books. This was the problem. To my mind, it looked like the CEO was trying to lay the law down and say, hey, we either have to perfect collateral or you have to pay. And because of that, it looks like he was then asked to leave by the former board. And that was, I think, why the central bank then came heavy handed and then asked the board to go. Because if the CEO was trying to right the ship and trying to secure the depositors' funds, which is far in excess of the promoters' funds, then it should be allowed to do that, especially where you have the board whose main responsibility is to ensure the going concern of the bank. So this is an easy thing to understand that, listen, they borrowed money from their own bank and they did not pay. But if it was that easy, we wouldn't do a podcast about it. I mean, the real thing I want to talk about in the podcast is what is going on in the Nigerian banks. If you read the First Bank's annual report as at 2020, I'm going to read what the audit committee, which the board released in 2020. Let me read what they wrote to you. The board committee said, we have reviewed the audit report on insider related party transaction, and we are satisfied with their status at the status of the loans as required by the Central Bank of Nigeria. So you have the board of First Bank of Nigeria basically putting in their own annual report that they have reviewed the audit report on insider trading and that they are satisfied with the status as required by the Central Bank of Nigeria. This letter was signed March the 8th, 2021, and CBN signed off this letter. So CBN signed off that First Bank is saying that they are okay and satisfied with the status of the insider related party transactions. So if CBN is satisfied, then what is the problem today? How can CBN be satisfied in March 2021? Then in April, CBN asked the board to go. What was satisfactory about that? How did that sentence or that concept pass through CBN and even the auditors? So, I mean, where is the corporate governance? There's every policy you can think about was in First Bank and it existed and it was written in black and white. The audit committee, the board committee that reviews loans and all that, they had all that world-class paperwork, world-class milestones and all that. But it looks like the policies were just written but never carried out. What about the auditors? I read the audit report. I took my time to read the audit report. And I would say that if you are not financial, if you don't have a financial background, you cannot understand what the auditors are talking about. I'm not talking as saying that what the auditors are saying is wrong, but the language that the auditors are using cannot be understood by anybody that is not an accountant, not even an accountant. They are talking of things like expected credit loss, lifetime probability of default, credit conversion factor, loss given default. These are technical terms that are correct, but do the ordinary shareholders understand what they mean? Did they really understand that their bank was in grave financial condition because insider loans had been taken and were not making payments? Hence, the bank was not getting income on the huge deposits that the bank was sitting on. I don't know if they understood and they said nothing, that's the bigger problem. But should the audit language be toned down to sentences that could be understood by everybody. I think there should be a regulation in that respect. If you in America, they have I believe it's called the Consumer Financial Protection Board, and what they do really is that they write. That's the Consumer Financial Protection Bureau. They write, if you have a mortgage in America, they would give you, the banks have got to write that mortgage in a certain way to make it clear and transparent to you. They will tell you, listen, if you pay this, you will take X amount of years to pay off. If you only pay your minimum, you would take a longer time to pay off. They break down the financial terms so that anyone that is taking a loan understands the implication of that loan, how his credit was reached, and the impact if he does not pay. The whole idea, as they say, is that they want to make sure that lenders treat you fairly. So the language is simple and easy to understand. And they also provide an avenue for you to make a complaint if you believe that the bank or the financial institution has not treated you properly. With the audit report, it's a lot. I don't think if you are a normal casual investor and you just bought shares in First Bank for your pension, you would understand those terms that are being used, how the bank was making a provision, how those provisions are changed with economic influences. I think they can leave that and do a page summary to explain what they are actually saying. So my real issue is that if this is happening in First Bank, would the CBN, the Central Bank of Nigeria, have acted if the First Bank Board had not removed the MD? Did the CBN only act because the MD was removed? Should they not have acted when the bank was in grave financial condition? Yes, in 2016, the CBN removed then the CEO of First Bank. But if the collateral has still not been perfected as at 2021, then why was the CBN waiting? Why were they waiting? So it's a lot of questions. And for me, it calls into question the policy that we see in annual reports in Nigerian banks. If CBN was today to say, let's do a stress test and ensure that all those collaterals are all perfected, how many banks will still, be standing? That's just what I worry about. That it had to take the sacking of the CEO to force the CBN to then pull the big guns and say, well, you have to be out of here. Let's right the ship. That's just my concern. And I also would like to see audit language in annual reports presented in a very, very simple manner that the normal person can read and understand. We don't have to be too technical. We can say everything we want to say in plain, simple, understandable language. On a final note, I would say the board is gone. I did see that the CBN asked Mr. Oye Hassan Odukale to leave, but also appointed his brother, Tunde Hassan Odukale. I mean, these are brothers. So if you are asking people to go and you're just swapping out the biological names, I don't know if that could be a clean sweep of the board. But again, like I said, let's watch. The key for me is to say CBN's role, what CBN has done, I think it is right. But I think CBN should also maybe move faster or to lay down the law. If depositors feel that their funds are not safe, it affects everybody. The run would affect everybody. So we hope that the CBN will keep on looking after our funds. It's the only country that we have, right? Okay, thank you guys for listening this week. I'll talk to you guys again next week. You guys have a good day. Bye.